Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. This is going to be your daily cryptocurrency market update. We release one of these videos every single day at 1 p.m. UK time. It is the 13th of the 2nd, 2023, one day before the CPI. We're going to be talking about that in this video, looking at expectations, looking at how markets are holding up. Now, I'm still very much on team more upside. Going to say Team Kramer there, but we're not Team Kramer at all. We're on Team more upside. And we've explained a lot of reasons for this. We are going to be looking at this. We're going to be looking technically. We're going to be looking at this pullback and levels that we wouldn't want to see it go below. We're going to be looking at open interest for Bitcoin, the dollar, which is going to cause a headwind. We're going to be talking about the death cross, the first one ever on the weekly, and what this may or may not mean. Of course, the CPI numbers, and have they got it right? I want to kick things off with the recent sort of rounds that's been getting done on Twitter. I woke up this morning to fear and panic from the Twitter community. It's a very over-exaggerated space, Twitter, just like YouTube. And it's this way inherently because obviously that kind of content sells. And I woke up this morning to lots and lots of charts of the Binance USD, so BUSD, and the Tether chart. I don't know why we've got Bitcoin against the NASDAQ on there. And people really panicking about this, saying that BUSD is decoupling. Decoupling from what? So BUSD is not Luna, it's stablecoin UST. BUSD is backed one-to-one with dollars. Okay, we've covered all this. We've said that there was lots of foot out for Binance when the whole FTX thing went on, and we said ignore it. It's FUD until we see some actual hard evidence and not just emotional reactions towards it and people really wanting Binance to fail, not understanding the ramifications that would have on the entire crypto space. And actually, if Binance fail, that would be the perfect situation. I can't tell you how many people I spoke to that have some links with institutions or are in that kind of traditional financial space that were looking at the crypto space saying, yeah, we wanted more pain out of FTX because we're looking to get into this space and we'd like to get into it as low as possible. So Binance's success, or them not failing, I should say, is, I think if you're into crypto and you want this space to survive and thrive and not become completely monopolized by big institutions, you don't really want to bet against Binance. All being said, this isn't a 100% assurance for Binance. I'm just saying that there's a lot of foot out there, and people saying that BUSD is depegging from a dollar that it's backed against. So BUSD is backed by $1. It's not backed by a crypto that can go up and down volatilely. And people looking at this depegging, it's not the first time that Binance has saw these kind of spikes. The real test is, does it get solved? This, of course, is coming on the back end of the SEC to sue Crypto Trust Co. Paxo over Binance stablecoin. Also, Paxo facing New York Department of Financial Services probe. So, I'm going to do a whole separate video on this where we're going to look at it in detail, what's actually going on, like we always do, to give people a little bit more clarity, and also to look at CZ's response. We know that the SEC sued Kraken. I actually think that the SEC and what they're doing, there's a very bullish undertone that I don't think people are paying much attention to, and that is that regulators are taking this space seriously. They're looking to regulate it, which we know is coming. This space is not going to exist unregulated. If it's to succeed without the collapse of these governments, essentially. And I think that this is a massive step towards that. It shows they're taking the space very seriously, and we already know that institutions have put in the groundwork to get into this space. The only thing potentially holding them back is regulatory clarity. But I will cover this whole thing. So I don't think BUSD is going to depeg from $1, considering it's backed by $1. I just think there's going to be a lot of FUD sort of thrown its way. And actually, Binance has got smashed as a result of this. But you've got to remember, guys, and this is where we're going to move on from this sort of SEC situation and cover it a bit later on, that crypto's had an amazing rally, guys. And ultimately, things don't just go up in a straight line. So we have actually looked, and this was all foretold, a pullback. Bitcoin was up 42% from this low. In fact, that's not even a low. Take it from exactly the low. Just over 55% up, okay? Without any kind of significant pullback. So a pullback was not only long overdue, it was technically forecast. Remember, we're looking at this sort of inverse head and shoulders pattern. This is, and we'll look at the Fibonacci's in just a second. I'll pull that off for now. A reverse head and shoulders, in the same way that a head and shoulders that's the right way up, is a reversal structure. We looked at a number of reversal signs, whether it be the RSI, whether it be something like Bitcoin open interest. You can see during this downtrend, you've had very aggressive and a supportive open interest incline. Open interest is just the number of open contracts that are on the market. It suggests, just like the RSI, before it was diverging, that there was confidence and commitment behind the trend. You can see actually, and these are all tools that you guys should have to your arsenal, which is why you should subscribe to this channel, because we'll teach you all of them. You can see that Bitcoin actually, if it wasn't for FTX, and there's actually an association with the dollar here, you could have the dollar chart, which looks very similar to Bitcoin open interest, then potentially you would have seen, like you saw for the stock market, which is risk, which is what you're looking at. Can you see how risk started to go up here? Bitcoin, if we didn't have the FTX thing, would have gone with the stock market and everything else on the back end of a weak dollar. But we had FTX, which is why we saw this kind of decoupling almost from the dollar. And now it's coming back to life. So this was potentially a trend ender. We saw things like USDT dominance. You know, I've got confidence in the decisions that I made at the start of the month to put money back into the crypto space for the first time in a year, essentially. And I still have that confidence. And I think actually there's a lot of FUD getting spread around right now. Some of it rightfully so, some of it wrongly. But I think that this correction is actually very, very healthy. And if you think about how a market moves, it doesn't just go straight up without any pullbacks. And this is actually, in my opinion, looks like a very healthy pullback that potentially, you know, could be looking to set us up for more continuation. And if you get something along these lines, you're looking for these levels up here, guys. And this is what I'm ultimately fixated on now. Until there's reason for me to suggest we're going lower, we had the Fibonacci retracement tool on. We will look at this. Fibonacci retracement tool is a great tool. Do I have a book? This is a fantastic book to read on the Fibonacci tool. It's a Bloomberg Market Essential Technical Analysis. Fibonacci analysis by Constance Brown. I found this brilliant. It talks about actually the natural sort of laws of Fibonacci's, which is where you get these numbers from. For me to get concerned, I'd want to run this 50%. So if you run this 50%, there's kind of a good indication that it's going to keep running. Certainly if you run your golden ratio at 6.5, or sorry, 6.18. 6.5 is, depending on who you talk to, your golden ratio. So you've got levels that I wouldn't want to go below. Also, from a head and shoulders technical point of view, if you run your left shoulder, it gives a lot less credibility to the move, because typically your right shoulder should be weaker than your left. And that shoulder potentially goes all the way down to 16.7. You know, you'd still potentially be in the round. I wouldn't want to come back below this much so. But the CPI number out tomorrow, we have said, and this is the importance of being in a community, guys. You know, anybody that's interested in joining mine, there's a link in the description to my Patreon. We did a meeting yesterday, which you guys will be able to catch up on, where we looked at positioning into the CPI and whether it was a good or bad idea and what we're going to do as a result of it. And we have said that essentially it's a very volatile time period going into a CPI, because that data reveal is essentially what's driving the macroeconomic landscape from a, if inflation is what's driving interest rates and interest rates is what's driving the markets, then it's an integral part. And I think that people, certainly if you've taken part in this rally, will want to take that risk off the table. And this is what you're seeing. You're also seeing it in the Bitcoin open interest. You've got to remember that we'd actually spoken about how the dollar may be in for a period of strength, looking at the Heikin-Ashi candles. Anybody who's a swing trader will probably be familiar with the Heikin-Ashi candles. Heikin-Ashi candles basically are a color-based candle. It's looking at momentum and momentum shifts. I've tried to trade this on the 1 minute, 3 minute, and 15 minute and 5 minute time frame. Scalping is not really for me. It's very sort of tedious and requires a lot more effort. And I think there's better ways to trade than being a scalper, but people essentially have their own niches within trading. And we essentially said, look, got one green close. We looked at this yesterday. It's usually followed up with another green candle, which could suggest you're in for a period of dollar strength. Right around this point, this key level of significance, which runs right the way back through the charts, it was likely you were going to get a bounce here, and we did look at it after having a pretty brutal time. And actually, Bitcoin did not appreciate in the same way that the likes of the S&P did as a result of this dollar weakness. You can see dollar is something that you need to watch. You had your dollar top, you had your bearish div on the dollar as well, and you're looking for that continuation. If it wasn't for FTX, we'd have gone higher. You know, I'm confident with where I'm at in terms of positioning. And again, if you want to find out my position, feel free to join the Patreon. You know, we gave a first call to buy on the 5th of January, which was down here. People don't believe me. The proof is in the pudding. I've even shown the video on here previously. It's not because I'm a genius at all. I've got many things wrong and will continue to get things wrong. But it's because I pay attention to what's going on. And have made enough mistakes to have learnt the lesson to pay attention. So this is still it. We're still looking at his head and shoulders. I'm going to take the draw off. And you know, you got to look also up for your altcoins. Ethereum, key level. Chainlink, key level. Atom, key level. You know, you were going to get a pullback here. It's across the board. And this is what you're getting. Dot, key level. Once you break out of this, you give markets that confirmation. And they're going to keep going, ladies and gentlemen. And we've been killing it from the start of the year to now. We've made a lot of money by investing, having saved a lot of money from being out of the market last year. I'm not saying that to brag. I'm saying that because you can too. Now, there's lots of rumors about this death cross. It's the first ever weekly death cross, sparks concerns. Bitcoin is caught between two crosses this month in serious scenarios, which is dividing opinion. As Cointelegraph reporting, a golden cross on the daily, but a death cross on the weekly. How do you position for that? I don't want to. You know, it's not really something that I'm particularly looking at. Maybe something that we bear in mind, but it's not of great significance to me whatsoever. And ultimately, you know, I'll take these other things that we're looking at over that any day of the week. So my overall opinion is that we're still looking and set for more upside. I just think that we're going to have this period of de-risking going into the CPI. There's going to be a direction driven. Even if I think the real risk for the markets is they go sideways, because if we get that slightly higher CPI, 6.6, which is kind of what I'm looking at, you know, I did a weekly meeting where I actually looked at the individual components that make up the CPI. Housing's a large part, commodities, energy, healthcare, education, you know, these sort of things, transport, which there's been a slight rise in. If we even got 6.6, I think maybe that might be bearish on the face of things. But actually, the risk there is that markets go sideways during a period of dollar strength and that headwind. I don't think the risk is that markets plummet and go to new lows. I really don't. I think the risk is that you see this sideways sort of price action rather than things, you know, tanking. They may tank on the news. You always on a CPI get the chart does this. It goes very, very low vol. You get the CPI and it does that, and then that, and then that, and then it does something like that, and then finds a direction. We're looking for this direction before we do anything. But that's really all I've got for you in this video. So watch out for this CPI number. The consensus is 6.2. You've got people like JP Morgan coming out and looking for slightly higher. I think providing it's under 6.5, it's a good result. Providing if it's over, then markets are going to sort of be a little bit hesitant because they're, of course, trying to price in interest rates where they're going. And interest rates are going to where they're going as a result of inflation. And they won't stop the crusade until they're back at 2%, which doesn't mean they won't continue to hike. It just means that they won't bring them down until inflation's back to where it needs to be. We're going to cover the Binance SEC news and BUSD news in a lot more detail in a video to follow this one. On that note, guys, have a magic Monday, and I'll see you all in the next YouTube video. Thanks a lot for watching, ladies and gents.